Laidler Capital Fund is not just another investment vehicle. It's a strategic response to a massive market shift with BC's new housing policies allowing up to 6 units on former single-family lots. We now have an unprecedented opportunity to transform exclusive neighborhoods into vibrant multifamily communities. It's a unique moment in time where government policies marked by demand and Laidler's expertise align perfectly. So today, we're going to walk through the Laidler Capital Fund, and we're going to explore maybe how it can be part of your investment strategy. So I'm going to introduce this opportunity. It's a Laidler Capital Fund 1. It's targeting 16% annualized returns. For now, it's more than that. It's really about transforming Burnaby's exclusive single-family neighborhoods into vibrant communities. Part of the demand is that we're not building housing that people want to live in. For those of you that know me, you probably know that I've been doing this for a very long time. I've really specialized in helping individuals, businesses, or small institutions add real estate to their financial portfolio. I've been involved in real estate syndications, development, purpose-built rental, multifamily value add, and strata ownership. I've exclusively focused on investment real estate opportunities for my entire career. But this one isn't, it isn't just professional for me, it's personal. I'm a mother of 3. I've worked for months to help launch this fund because I believe the missing middle deserves housing that works for them. It's more about, this is not just about returns, it's about impacts, but creating housing solutions for families, revitalizing communities, and offering, opening up real estate investment opportunities for local investors, really. I work with Parviz. Recently, I moved to this company. It is a robust digital investment platform that really is great at connecting accredited investors with vetted real estate products opportunities right across Canada. So we're registered across the country. So I can act for any investors. Through this streamlined onboarding, regulatory compliant, and transparent reporting, Parviz really simplifies investing in private equity. So the portal is built to simplify the onboarding process, track your performance, manage your documents, and it's all in one place. Digital onboarding and KYC easily complement each other. It's easy to complete your applications. You have access to all of the different offerings, really easy to review and actually to invest and subscribe directly. There's a portfolio dashboard for you and document center. So you can go back and find your documents and you can actually track the progress of your subscription. So let's dig into why multiplex. I think that really, the key here is multiplex housing is the most compelling response that by the British Columbia government to solve a housing crisis. We're blending density, design, and demand into one of the province's most investable asset classes, which is housing. Thanks to the new legislation, Bill 44, cities like Burnaby now allow up to 6 units per family lot with no rezoning and fast-tracked approvals, and construction starts within 12 months. This really opens the door to low-risk, high-efficiency development, and it in an already established neighborhoods. It's really about smart growth, real returns, lower risk, and a 2.5-year, 2-year to 2.5-year horizon. Under Bill C-40, BC's Bill 44 is, as of June 30th, 2024, municipalities must pre-zone all single-family lots to allow 4 to 6 housing units per lot without a rezoning process in frequently trafficked high networks and bus loops, with official community plan updates required by the end of this year. The legislation is meant to enable faster permitting, reduce development risk, and it supports the province's goal of increasing housing supply in established neighborhoods. These approvals require no public hearings or OCP amendments. So this has really changed the building landscape in BC, and particularly Lower Mainland, where housing affordability is at crisis levels. Very excited to be able to be involved in this, because I think it is really where new housing is going to be. I'm not sure if anyone saw this article. It came out in January. There was also CTV put it on. You can Google it. But really, it's a family in Delta, the Higgins, longtime residents of North Delta. They transformed their single-family property into multi-generational living space. They replaced their original home with 2 duplexes for a total of 4 units. And this is what families want. So it's building nice-looking design in single-family neighborhoods, so it's in keeping with the neighborhoods, and that's really the focus of Laidler Capital. So talk about why Burnaby. Burnaby is leading the province in delivering this type of housing. It's faster, smarter, and more livable. Its location between Vancouver and the Fraser is very central. It also offers unmatched access and a diverse economy, and one of the highest population growth rates in Metro Vancouver. It's also the only city within the region that is enabling these multiplex developments with no rezoning requirement. It's where provincial policy, city leadership, and demand converge, and now it's going to be great for investors. Housing prices have doubled in the last 10 years in Burnaby. So your median home price, single family, is around 3.2. Your duplex is about 4-bedroom duplex, about 2.2 million, and condos run on average about 1.1 million. Laidler Capital homes will be priced between 1.35 million and 1.9 million, directly targeting the underserved missing middle. Recent legislation through Bill 44, 46, and 47 has transformed the development landscape in BC. Cities like Burnaby are now pre-zoning single-family lots for up to 6 units without requiring rezoning, faster permits, fewer political hurdles, and lower development risk. Burnaby leads the way with a 12-month permit timeline. That compares to the typical 4 to 6 years needed for multifamily rezoning. Investors will benefit with shorter timelines, reduced carrying costs, and faster access to your returns. And you're going to have lower soft costs, carrying risks. These are in-demand unit types, 3 to 4 bedrooms, family-sized homes with attached garages. They're all priced below 2 million and well under detached home benchmarks and the duplex, which is their competition. They are the ideal layouts for multi-generational downsizers and move-up buyers. So who is the Laidler Group? Laidler Group is a parent company behind Laidler Capital and a broader sort of real estate ecosystem. It was founded by Bill Laidler, and it includes a network of companies that all offer real estate sales, education, development, and investment all in one, under one umbrella. So Bill Laidler has built an impressive reputation in the real estate industry. As I mentioned, I worked with Bill in 2016. He was very involved in land assembly. He brokered over 600 million in property sales and is led the development of over 100 million in completed projects. His expertise in infill housing, land assemblies, and working with top-tier builders positions Laidler Capital as a leader in the real estate investment space for multifamily. This real estate education platform, the Laidler Academy, has trained over 3,000 professionals. A lot of these professionals are bringing the deals to Laidler Capital. The workshops and the intensive training and coaching is focused on small-scale, multi-unit housing, feasibility and underwriting, land acquisition, and capital raising. It's built to empower agents, investors, and developers. And if any of you are interested in learning more, please let me know. I'm happy to connect you. They also offer feasibility studies. This is the first critical step in evaluating the potential of small-scale unit development project. It's designed to help property owners, investors, and builders understand whether the land or the prospective site is viable for a multiplex townhome development under BC's new housing policies. So this brings us to Laidler Capital, which I started and have been working very diligently with Bill Laidler to bring this to the market, to investors. It's the investment arm, managing real estate limited partnerships under the Laidler Capital Fund. It's focused on ground-oriented multifamily housing like townhomes and multiplexes, and it really aligns local investor capital with policy-supported opportunities. So let's dive into what the fund is. I'm going to be talking about numbers and projections, and all projections are estimates and not guarantees of future results, and actual performance may differ materially from what is presented. The content is for illustrative purposes and does not constitute an offer or a solicitation to invest. Your investment decision should be made solely based on the confidential offering memorandum. Parvis is a registered exempt market dealer in all Canadian provinces. And what I'd like to say is past performance is not indicative of future results. As an investor in Laidler Capital Fund 1, you're investing in 3 developments. There's a total of 23 homes, and the investment time horizon is 2 to 2.5 years. Capital will be returned before this time as the units individually sell. Investors receive a 12% preferred annual return before there's any profit share. Target returns are 16% annualized, and that's on a very stressed pro forma, which I'm going to walk through a little later in the presentation. This is the breakdown of what the units are. There's mostly 4-bedroom townhomes, which are the highest demand, and they're targeting young families. And then there are a couple of downsizers options just to test that market. So they're moving into the market, focusing on the asset that is in most demand. So let's just look at the structure. At the center is Laidler Capital, who is raising $7.5 million from investors to fund 3 small-scale multi-unit developments in Burnaby. The limited partners are the investors. These are individuals like you or institutions contributing most of the capital, 75%. And in return, you're getting a 12% preferred return and a profit participation, a 60% profit participation. BLDG is the general partner, and the principal owner is Bill Laidler. He's responsible for managing the developments, and he will be, the BLDG is contributing 10% of the required equity while overseeing the execution of the. It's all pari passu, which means you are equal priority with the other limited partners, and they will earn a management fee and share in the profits at the end after your 12% preferred return is paid per year. The builders will enter into agreements with Laidler Capital, and they will have to contribute 15% of equity for their developments alongside the investors. Again, same priority ranking. They will earn a construction management fee and a catch-up fee, which I will go on to explain a little later. So where does the money go? There's 3 properties, 7609 Caldecott Street. There's 4 units for that. $1.6 million equity is estimated to be required at this time. 3381 Leyland Court, 7 units is projected with an equity requirement of about $1.9 million. And 6339 Dufferin Avenue, which is looking to build 12 units and requires $3.7 million equity required. So that's the 7.5 million. There's a bit of reserve in there. I'm going to walk through the pro formas little later to demonstrate the profitability. So really key to all of this is they've got skin in the game. The general partner is going to earn a 2.5% annual management fee. It's capped at 2 years. They will share in the promote 40-60 profit share with the investors after the 12% preferred return is paid. Each of the builders enters into an agreement with the Laidler Capital under a limited partnership, and they're called the funded general partners. They each have to provide 15% of the required equity for their development. Again, ranks pari passu alongside investors, which means there's equal ranking in priority of payout. Laidler has oversight and control through an investor's right agreement and through their advisory board. So let's talk about what are the highlights here. Why do we like this deal? Less time in the market, less exposure to interest rate hikes, inflation, market cycles. Shorter projects are less vulnerable to policy change. construction, and cost spikes, and buyer demand shifts for that matter. Your money returns sooner. As each unit is sold, you'll be getting capital return of capital, allowing you to reinvest or access these returns more quickly. Less time means lower interest on construction loans, lowering holding costs, and faster sales turnover. All of this contributes to higher net returns for investors, more control, less risk, and faster upside. Laidler has tied up properties. These properties that we are putting into the fund have been tied up over a year ago. There were over 200 sites underwritten to select 3. So they're very selective because they have to meet certain criteria. So what is the missing middle? Missing middle are ground-oriented, often family-friendly homes that fall between your high-rise condo and your single-family homes. These are missing from the market right now due to really outdated zoning and limited land supply. People are looking for more space and function than a condo and more affordability than a detached home or duplex. In 2024, in Burnaby, the average 4-bedroom duplex was $2.2 million, and the average home was 3.2. It's targeting the demographics that want to remain in communities that they raise their families, and for young families to move in closer to their parents so that their kids have closer proximity to their grandparents. This is a mission and a vision of Laidler Capital and Bill Laidler, and I'm wholeheartedly behind it. So what I look for in a good investment is really, what are the risks and how are they mitigated, and how is this investment aligned, all the stakeholders aligned? And, truly everyone has skin in the game. The general partner, the builders, they are contributing 25% of the equity, and they don't share their side until you've achieved your 12% return. I that structure. And also the builders that Bill Laidler has groomed a relationship with over the many years that he's been doing land assemblies, they're quality builders. They're selected based on track record, successful execution, and innovation. There were over 40 applicants submitted for the Laidler Capital Fund 1. And this is just an example of one of the developers. It's an award-winning Vancouver-based builder specializing in high-quality architectural net zero homes and boutique multifamily projects. Icon is a trusted Metro Vancouver builder known for delivering efficient, cost-controlled multifamily developments. And Theorem is a forward-thinking real estate, very young, progressive, using technology. They're creating thoughtful community center infill housing across Metro Vancouver. I think this year they're going to do, I believe, 12 projects in the multiplex space. And they really are committed to smarter design and sustainable urban growth. Obviously, winning awards for their innovation, and they're very data driven. So they have used all the technology to make sure they're on time, on budget, and delivering a high quality product. I've worked with Western Canadian Properties Group. They are a larger real estate investment and development firm specializing in purpose-built rental housing and value-add multi-family projects across Western Canada. And they work extensively with BC Housing. So as you can see, there have been a number of builders that have applied. This is just to give you a feeling for who has applied and the quality of them. Another benefit for investing with this first fund, and I'm sure with funds to come, the land was placed on a contract, will be assigned to the builders that are selected. And it's going to be assigned at cost. It represents about $1 million land lift for this fund. And recent sales also support this land valuation. The previous slide was directly from the appraisal, but these are recent land sales. 1.9 was what the land was purchased for, and you can see sales of lands are quite a bit higher. So there is an investor's right agreement, and this is really to help the general partner, BLDG, make sure that the builders that they underwrote to do the developments are on time, on budget, and on schedule. So the selection process underwrites the builder's financial covenant. So they look to see, are they liquid? And they negotiate favorable terms for the LP investment, and they ensure that the development managed fee is at risk if over budget, and increases any increase to related party payments, cost overruns, escalating fees. These are things that the investor rights agreement has oversight and veto power. They want to limit the builders to stick within their budgets, and so they will be entering into agreements to ensure this and providing oversight to it. Here's who's on the Laidler Capital Advisor Board. Very impressive. Their award-winning team providing excellent oversight. Bill is the recipient of Top 40 Under 40 in business in Vancouver. He's brokered over 600 million in land development and completed over 100 million in multifamily construction. He's really a pioneer in small-scale infill housing. He also leads his academy, where he's trained over 3,000 professionals in 2024. Mike Saba has been recognized wealth professional Canada's Top 50 Advisors Award for multiple years. He has a track record of raising and allocating over 500 million. So he'll be looking at the pro formas and the financing and the equity structure so that it helps investors or protects investors. Gary Pooney, he's the recipient of the Planning Institute of BC Award of Excellence. Recognized multiple times in Vancouver magazine's Power 50 list, business in Vancouver's Top 40 Under 40, and has advised over 10 billion worth of real estate development in the Lower Mainland. Particularly, Oak Ridge might be one that everyone's familiar with. So great experience, oversight, and direction and guidance from this team. Let's talk a little bit now about the properties. For decades, these Burnaby neighborhoods, Upper Deer Lake, Caribou, and Government Road, were reserved for single-family homes. This fund will open the door for families, downsizers, investors to access these communities through boutique townhome developments. Again, I just really, these developments are homes, they're lifestyle-driven investments. These are townhomes with front doors, private garages, and backyards, and they're all priced under $2 million. Designed to meet the needs of today's urban families. These properties were strategically selected on reducing the risk of supply and ensuring the product type is a price point that will have high absorption rate. The first one we're talking about is Coldicott, 7609 Coldicott in Burnaby. It's ideal for downsizers and multi-generational families. It's a very unique design. It's for detached strata homes. These homes have no shared walls. They offer full privacy in a compact layout. It's new and it's definitely unique to this product market. The location is quick access to Highway 1 and Goularty, very convenient for commuters. It's in recent years become a lot more accessible. Crest Caribou Pocket is considered a hidden gem by the realtors. Shopping is 10th Avenue Mall. There's Choices, coffee shops, banks, insurance. There's lots of major retail hubs nearby. Edmonds, Kingsway Superstore, Costco. All of these are within minutes from the site. The beauty of this site is it backs onto Caribou High School's track with direct access to green space and recreation. It's very family oriented. Lots of young children, nearby parks and schools enhance the lifestyle quality. And it's really about being able to live in a quiet parkside setting, really, with really no neighbors. It's located in a cul-de-sac. So now the central driveway, attached garages, no community walls, and these will be individually stratified homes. You know, some of the design, there's no steps to the front door. There's going to be widened stairway so that you can make it accessible for wheelchair. Laundries on second level to make it easier for the day-to-day task, wider doorways, and building permit is really very close and imminent. There's a 700 square foot floor plate, so it gives an opportunity to have a very nice floor plate, great layout, great designs. And interiors will be modern, very minimalist, but nice and clean and modern, and obviously very attractive to today's marketplace. The 6339 Dufferin is located Upper Deer Lake, Windsor area. It's on a quiet residential street surrounded by mature homes and tree-lined avenues. It's directly across from Riley Park and surrounded by an established, safe, walkable neighborhood. To give you an idea of where it's located, Metrotown, province's largest shopping center, is just 5 minutes away, offering 330 stores, services, major retailers such as Apple, H&M, Zara. It has over 1.7 million square feet of retail space. Other local conveniences are Royal Oak Plaza, Burnaby Public Library, and the Shadbolt Center for the Arts. So very centrally located and walkable. The subdivision was submitted in the fall of 2024 and it has support letter from the city. So the property is one of the unique things. It met the strict guidelines from Laidler: flat, buildable land, quiet residential street, and has over 72 feet of frontage, which is very unique and rare. Walking distance to Royal Oak SkyTrain station, schools, and shopping. Only 3% of Burnaby properties in Burnaby meet these criteria for the slab-on-grade townhomes with the attached garages and private backyards. There's no rezoning required or public hearing required. They're looking to develop 12 slab-on-grade townhomes. Each will have individual front doors, private attached garage via an internal driveway, 3-bedroom layout suitable for families, approximately 1,650 square feet, priced at 1.5 million. So, you know, again, this really fits the market demand. I know for people in the audience that are from outside of the Lower Mainland, this may seem really expensive, but these price points are considered very desirable in these areas. So our last property is 3381 Leyland, nestled in the prestigious Government Road area. It's surrounded by executive homes, quiet cul-de-sacs, and it's located in one of Burnaby's most desired exclusive single-family enclaves. It's a rare opportunity to introduce this ground floor multi-unit housing to. It's very limited supply for this neighborhood. So location-wise, Seaforth Elementary School, Burnaby Lake Regional Park, Charles Rummel Park. So lots of parks, lots of schools close by. I think Burnaby Mountain Secondary is very close. Lougheed Town Center, this was very close to my principal residence that I sold in 2019, so I know it well. Brentwood Mall and Costco Health Services Banks. So there's just really easy access to Lougheed SkyTrain, which takes Millennial and Expo. So Highway 1 is right there, SFU and New Westminster under 15 minutes, and downtown Vancouver is just 30 minutes. The subdivision was submitted the fall of 2024 and has received support letter from City of Burnaby. It will subdivide to 2 lots and build up to 8 units. Blocks of 4 will be less than 1.35 million, 2 bedrooms averaging 1,200 square feet. And providing, I guess, this will be providing the most attainable ground-oriented units in this market. It's within 1 kilometer of SkyTrains and a quiet, no through road to Seaforth Elementary. So those are the sites. They're very desirable. I'd like to just walk through some key assumptions and forecast returns. So this is the project budget, what it costs to build. The total cost to build and sell 23 homes is 28.45 million. So it averages about 1.24 million per home. Cost efficiency is solid with $310 a square foot construction costs. And they've really stressed their pro forma by increasing the contingency from 5% to 7.5%, just to factor maybe what I call the Trump tariffs and the terror maybe. This stressed pro forma has increased the contingency and extended the timelines for these sales. I think that has made this a much more conservative look at what the actuals will lead out to be. Laidler and the development partners are co-investing alongside of you. So the investors like you will be bringing in 75% of the capital, and Laidler Capital will provide, with its partners, will provide 25% of the equity, which again, I can only describe that this is a very good structure when all interests are aligned. So the revenue, what do we expect to sell? The average sale price is around 1.6 million. This fits comfortably under the market benchmarks. You're looking at average price in 2024 of 2.2 million for duplex and 3.2 million for single family home. I think this missing middle home is in very high demand in the marketplace. We just had 3 realtors on the call a couple of days ago, and they all support the pricing and all support the asset. Profitability, what is the return? The project has 5.6 million in projected profit, and that's after covering all costs. There's definitely enough margin to pay out the preferred returns and share profits with the investors. Again, the pro forma has been stressed to factor in tariffs and what that might do to impact the marketplace. So even if the homes sell for 200,000 less than projected, the investors will earn a 12% annual return. That's a really strong downside protection. Average price per square foot to achieve a 16% annual return is $950 per square foot. And again, I'm going to go through some comps after to support that that is actually very conservative for even today's market. So stress test, they've increased their hard cost contingency from 5% to 7.5%. They've extended the investment timeline from 2 years to 2.5 years. And there is a revenue buffer. Limited partners will still earn 8 to 12% annual return at prices 200,000 lower than the base case scenario. So we're going to talk about the comps. Moonlight Sonata is a new residential development by Symphony Homes located at 3588 Weyburn Drive in Burnaby. It's the Douglas Gilpin neighborhood. They're townhomes and garden flats. They offer 3 to 4 bedrooms, layouts ranging from approximately 11 or 1,200 square feet to about 1,450 square feet. The latest sales in March are showing the average price per square foot is around $1,010. So keep in mind, Laidler's 16% target return is based on $950 per square foot. Element 2 is a townhouse development by Square 9 Developments. It's located at 7161 17th Avenue in Burnaby, Edmonds neighborhood. It's 27 townhomes. There's 1, 2, and 3 bedrooms. The layouts range from anywhere from 600 to 1,400 square feet. A bit smaller than the ones proposed by Laidler, and they're achieving around almost $1,100 a square foot. And these are on really recent sales. This is a sale that happened in March 4th, and it's a reasonably new build. It's a new build, and they're achieving around $1,000 a square foot. And another sale that was in February for a very comparable product was $1,054 a square foot. I think you get my sense here is ultimately, I think Laidler's been very conservative on their pro forma, and I think the 16% annualized return is very achievable. So I like the structure. I like the conservative approach to the pro forma. I like the fact that you're getting a 12% preferred return before there's any profit share split, and that there's skin in the game from all of the stakeholders, the general partner and the builders. Laidler Capital also has, through its Laidler Development and Laidler Real Estate Academy, a great pre-sale network. So, and they're going to provide development management and construction oversight through their advisory board, which has a very skilled group. So the fund is limited to 49 accredited investors. The minimum investment is $100,000. On signing subscription, you have to place a 10% deposit, and then the final funding date is June 15th, 2025. For those of you that have not worked with me, probably book an appointment to set up or activate the Parvez account. You can either do this through reaching out to me or, replying to the email saying you're interested in knowing more, even book a meeting that, you can talk about this if you have more questions for sure. We're going to be hosting a couple more events, some live events with bringing out the builders and the realtors so that people can network and ask the questions direct. And subscription documents, everything's done through that digital platform for Parvez. It's very slick. It's very secure. They've done a lot of, they've built a very robust platform to ensure security, streamlined, and accessibility for investors. If you want to click on this QR code, you'll be taken to the portal information to see what we've talked about, just the overviews. There's going to be some updates. We'll let everyone know. We're just finalizing all the documents and they will be uploaded probably by the end of next week. Thank you very much for taking the time. I'm going to open it up for Q&A. So if you have any questions, feel free to enter them into the chat or you can raise your hand and I will be able to open your mic up. Thanks again. So are there any questions? Feel free to pipe in. I think you can unmute your mics and just talk.
Hi, Cynthia.
Hi, Adil.
Hi, name's Manny. I'm just driving, so I'm gonna just book an appointment with you. It's about time we meet.
Perfect. Okay. Well, for sure. Just reach out. Either send me an email, shoot me a text. We can figure out a time to meet. Thank you for your interest.
No worries.
Question from Adil. How has the interest been in the fund? Interest has been great. We really have done a lot of soft launches, but I'm talking to a lot of people. A lot of people are like me. They like the idea that it's more than just an investment. They like the fact that it's a give back. They very much like the fact that this is helping younger families stay closer to their parents so their kids get to know their grandparents. So yeah, it's been excellent. This is the time to ask the questions.
Cynthia, this is Ronnie Jagday. Just want to say thank you for the presentation. Well done. Well done to you and Bill. Looking forward to collaborating and being in touch. Well done.
Thank you, Ronnie. Looking forward to getting together. Okay, so Stacy, if the properties are already zoned, why does it take 12 months to break ground? Stacy, there are still design guidelines that they have to go through. So you don't have to go through a rezoning, but you basically have to do the designs and builds and development, construction, pro formas. Most of that's been done, but until you get the final approval on the designs, which they're very quick to do in Burnaby, it's, typically if you wanted to compare this to a 6-story wood frame, that takes anywhere from 4 to 6 years. Some of the developers, I know, Stacy, that they have already gone through that, but that's how they purchased the land, but it went through a rezoning prior to that. All of this, they're well into the plan with these properties. They've submitted for subdivision so that they can do the 2.5 years is, definitely conservative in terms of when these properties will all be sold. Hi, Grace. The stages are, well, the 4 at Caldecott, that one is ready to go to building permit. The other 2 have, the subdivision was applied for last fall, and they're in talks with the city, and they have had I guess, letter of support from the city. So now it's just a question of working through the design guidelines. Approximate construction start dates, David, are within 6 months of the fund closing, which is June 15th for all projects. But the Caldecott one will start as soon as they close. Thank you for your questions. So if there are no other questions, feel free to reach out. Easy to book a quick call to go through everything. As I mentioned, final documentation and subscription will be available by the end of next week. We're just finalizing a few of the limited partnership agreements with the builders, and they'll also have made their builder selection by the end of this week, which is tomorrow.
Well done,
Great.
Cynthia. Well done.
Thank you. Have a great day, everyone.